Hey, what's up, Alex? We back. Uh, Last video of the day, 5 of 5. That's a question I got for you. I mean, I know you always ask me these questions, but now I'm gonna flip the script on you and ask you. So right now, we got the S&P 500 sitting at 540. That's the SPY, not the S&P 500. Uh, I can tell you what the S&P 500 is sitting at. The S&P 500 is sitting at 5408. My question to you is give me three stocks that you're looking at to take advantage of if the market turns down 10 or 20% from here.
Can I include index funds or individual?
And do it. Do you? What are you looking at?
Okay. So right now, there's ones, and I will say this, with what I'm looking at right now is SPY, QQQ, Disney. Those are my three. There's some that I hope come down. I mean, there's obviously Apple, there's Meta, there's, Amazon. But right now, those aren't at the price I want them at. So QQQ, I like where it's at right now. I've been grabbing a couple shares. If it comes down, grabbing more. But I've been pulling back from really putting in my whole cash position because I want it to come down more. But at the price it's at right now, I'm comfortable with starting my position on that. SPY, I'm waiting for it to come down to that like below 520 range before I start buying into the SPY.
Just
And
for the viewers out there, the QQQs is sitting at 448. That's just for the viewers out there. All right. Go ahead,
Mhm.
Alex. I'm listening.
and the reason why I say the 520 range is my last cost basis on SPY, not counting options premium, was at 518, and then I got out at 543.
And so right now, SPY is at 540.
Right.
And
So
you're
I had
looking for
gotten
what
it.
range again?
I'm waiting for that below 520 range. So kind of where it dipped last. It had gotten all the way down to 508. I mean, that would be great if I can get it there. But I haven't bought SPY until it comes down to that below 520 range. I'm not gonna start my position in it. So go back to QQQ if you don't mind. Unless you
Mhm.
were gonna look something up over here.
No, go ahead.
Okay. Yeah, so QQQ, I've already started grabbing shares. Um, if it comes down to that point, I think it hit 530. Um, around it was around there, 530-ish. Or I'm sorry, not 430-ish. If it comes down to that 430 range, that would be great. I think I'll start buying even more if it gets into that price point. But where it's at right now, I'm comfortable with picking up shares. And then Disney, um, I'm actually selling puts on Disney, and I'm comfortable with where it's at to get exercised. So right now I have 84 puts on Disney, and I like Disney especially because, I mean, just from that text I sent you the other day, Disney's annual revenue is pushing over 80 billion, and their market cap is 160 billion. So, I mean, I understand revenue is not profit, but pulling in revenue of half of what they're valued at and on an annual basis is insane. And just matching that up with a company, which I know they're in completely different sectors, but just dollar for dollar matching up with, say, a company like Nvidia, where we saw Nvidia crash because their revenue is only 60 billion, and yet the company's valued at 3 trillion, or was valued at 3 trillion before the drop. That's insane. So you've got a company like Disney that is worth essentially 15 times less, or 10 to 15 times less than Nvidia, and yet they are producing more revenue than Nvidia. So, just that was one thing I kind of pointed out when I was looking up Disney and their financials. But those are the three right now: is SPY, QQQ, Disney. And the reason for SPY and QQQ is I want to get 200 shares, whether that be 100 shares of QQQ, 100 shares of SPY, or 200 shares in either or. I want to get 100 shares or 200 shares so that I can sell option premium for an average of, let's call it, $80 to $100 a day. So when I was in QQQ before, um, and then getting out of it at its high, and we did a video on why I got out, paying off the car, that mistake I made. But at the time when I was selling options on QQQ, I was bringing in 12 to 1500 a month. So I had done that for about a month and a half, and it was consistent. It was 12 to 1500 a month in option premium. So if I can do that with 200 shares, that would be, let's say, on a conservative amount, 2 grand. Let's say 2 grand a month. And that is that's an income I would like to have in my portfolio. Disney, I would like to get into it for the just the attractive price point it's at. I mean, I think it's very undervalued right now.
Hey, let's just break down just for me. I'll stick with the ones you have, and then I'll venture off to the other ones. All right, for me, SPY. SPY, 10% down from here, from the 565 level. We'll put it
Mhm.
at 508. I won't, that's just me. I won't look at it until it get close to this level that we reached at in early August. So 508. 20% down is 452. 452. So if we ever hit bear market territory, we coming back down to this level right here. Coming back down to this level right here. If we hit bear market territory. So for me, if I'm in this, if I'm looking to play SPY, I'm looking for a 10% downturn between now and October. Then I'll start building the position there. And then if it goes down more, I'll keep building, 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 building. Qs is the same way. That's how I look at the Qs and the SPY. I look at them at 10% and 20% increments for the Qs here. So 503 minus 10% here, 452. So 452 is already at the 10. 452 is the 10% level. So we're already at the 10% level. So building a position, starting a position here, like you said, you like this position here, you're spot on. And then I would just want to see what it looks like as it goes down. So 503, then minus 20%, then that we're sitting at the 402 level. So right here at around this red line. So building a position from here to here is good. I mean, I usually do it in lots. You could break it up into 4 lots. So 25% each lot. So buying 25% here, if it goes down another, go down here to this 427 level, buy another 25%, 420, 415 level, buy another 25%. Then when you get down to this last level, buy another 25% of the total money allocated in there. The reasons you have for Disney is spot on. I like your analysis on that. Disney itself, it came from 103, but the revenue cost of sales two times sales. Disney is very, very, very cheap times sales. 2 times sales is extremely cheap, especially in this realm. But Disney is going to have some problems. I mean, they had the issue with the government with DeSantis in Florida. The margins are a lot thinner when it comes to streaming and then the parks and things like that. The price is astronomical for people going to these parks, but the margin is thinner because the cost of employment, the cost of everything else, the cost of goods is going extremely higher. I looked up Disney while you were speaking, and Disney, I believe their net margin is only like 8 or 9%. That's their net margin on their stuff, but still selling at 2 times sales is very cheap. In the recent highs from March of this year, it was at 123, And I think the all-time high is 203 for Disney in that realm. Disney did start bringing back their dividend this year, which was a good thing, early 2023 or middle of 2023, because they stopped the dividend during COVID, but they did bring it back. They pay it every 6 months, I believe. Oh no, they're back to quarterly. Sorry, they're back to quarterly on the dividends there. But yeah, I think valuation attractiveness for Disney is great. Another one that I like is Nike. Same aspect. I mean, it's been getting crushed of late. Nike, they have the Nike brand, they have the NFL deals, they have the MLB deals, they have the MLS and soccer deals in some countries around the world. I believe they still have pricing power. They might be in this low for a minute, but it gives me time to build a position. But overall, the company and the moat and the name Nike is still prevalent in the name, especially the Jordan brand himself. The resale value on that and the different avenues that they can leverage, especially going from instead of selling it strictly as a wholesaler to the retailers like Foot Locker and things of that. And now they pivoted to just doing online sales that really increase their margin and profit value there. So I still believe Nike has a good way to go. So far as buying wise, anything 90 and below, I am a buyer of Nike. And then once it crests above 90, then I just let it fly. But I have been building a position there. But other ones that you brought up was the Amazon and Amazon. Amazon is Amazon. If Amazon ever crests $100 again, of course that's a buy. But if you're just going from, one from the 201 high, and 10% down from there is like 179, 180. So we already down 10% there. But try to get, 15 to 20% down. So we sitting there looking at around the, 145 level. So looking at this high around the 145 level, we can get in there. That would be very attractive. The darling of them all, everybody wants a part of NVIDIA. Let me just take this back to the year chart here. NVIDIA 140, of course, is a split adjusted. I've said it millions of times. People think I'm crazy every time I say it. I said I will not touch NVIDIA until it hits the 80 range. I mean, the low 80s, high 70 range. So somewhere in this area, that's when I will look to be a buyer in NVIDIA. If it never gets down there, oh well, it's just one I missed out on. But I'm not going to buy NVIDIA anywhere close to the level that it's at the 102 level because of two things. The CEO, the CFO, and another executive is selling the stock hand over fist. Yeah, the company did say they're buying back stock, but it's very counterintuitive. As a board, you're saying the stock value is cheap, so you're buying back stock, but your CEO, CFO, the people that run the day-to-day operations is selling stock hand over fist. So which one is right? That's where I'm at with that. Do I believe NVIDIA is a good company? Yes, but I also believe competition will come to knock NVIDIA out of this glamour profile. There's other companies that's building chips for the AI space that will undercut them in pricing eventually, but it's not right now. So it's just like Tesla with the EV. Tesla was producing EV, and then they were the only name in the game that was actually mass producing and people wanted their vehicles. But now you have Ford, you have Chrysler, you have Porsche, you have McLaren, you have everybody now producing EVs to bring competition to it. So that's why Tesla stock has not been performing as it has done in the previous years. So I think the same thing will happen in NVIDIA. That's why I will only grab NVIDIA at a very attractive price. And I'm thinking sub 80 would be that price. So that's my rundown on the couple of stocks that I'm looking at. But Alex does a good analysis on the reason why you want to jump into those different levels. You got anything else before you close it out?
No, we'll leave it there, guys. If you have three companies, let us know which three you're looking at. Don't forget to like this video, share, subscribe, and we'll see you guys on the next one.